Hey there, financial navigators. Welcome back to the channel where we demystify the markets and uncover unique opportunities. Today, we're diving deep into a specific stock that's showing up on our hard-to-borrow screener with an eye-popping cost-to-borrow fee, CIIT International Inc., ticker symbol CIIT. This is a fascinating case study in the world of microcap stocks and potential short squeeze dynamics. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Let's kick things off with a quick profile of CIIT. CIIT International Inc. operates in the industrial sector, specifically within integrated freight and logistics. Through its subsidiary Rushing International Company Limited, CIIT provides logistics services across Hong Kong, Vietnam, Japan, Zimbabwe, and South Korea, primarily focusing on ocean freight forwarding and container shipping. Show CIIT logo/graphics. This is a microcap company with a market capitalization of just $3.03 million. Highlight market cap. Looking at its recent price action, CIIT has seen some wild swings. Today, it's down about -2.86%. Over the last 5 days, it's dipped -6.59%. However, if we zoom out to the last 30 days, this stock has surged an incredible +608.33%. Show 30 DOI chart volume-wise today saw 41,400 shares traded, significantly lower than its 30-day average volume of 232,336 shares, giving it a relative volume of just 0.2x. The estimated float for CIIT sits at 7.3 million shares. What is cost to borrow and why it matters? So, why is CIIT on our radar? It all comes down to its cost to borrow, or CTB. For those new to short selling, CTB is the annualized fee short sellers pay to borrow shares they then sell, hoping to buy them back cheaper later. A high CTB is like a flashing yellow light. It tells you there's either very high demand to short the stock or a very limited supply of shares available to borrow, or both. These fees are expressed as an annualized percentage, and yes, they can often exceed 100%. Why the stock is hard to borrow right now? For CIIT, the annualized cost to borrow fee is an astounding 951.2%. Highlight CTB number on screen, let that sink in. A short seller holding CIIT for an entire year would theoretically pay almost 10 times the stock's value just in borrow fees. This is an extraordinarily high number and a clear signal that CIIT is currently very hard to borrow. We don't have current data on available shares to borrow, but with a fee this high and an estimated float of 7.3 million shares, it strongly suggests a very tight supply of shares for shorting. Our internal composite squeeze score, which combines various factors including CTB, momentum, and float, rates CIIT at 49.5 out of 100. This is a mid-range score, indicating it's not a slam-dunk squeeze candidate, but certainly warrants attention due to the sky-high CTB. Remember, a high CTB doesn't guarantee a squeeze. It can also mean short sellers have very strong conviction and are willing to pay these high fees to stay short. Squeeze mechanics explained. A short squeeze occurs when the price of a heavily shorted stock begins to rise, forcing short sellers to buy back shares to limit their potential losses. This buying action, in turn, drives the price even higher, creating a snowball effect. For CIIT, with a 951.2% CTB, short sellers are under intense pressure every single day just to maintain their positions. If CIIT's price starts to climb significantly, that borrow fee becomes an even greater burden, increasing the likelihood that some short sellers might be forced to cover, fueling a potential squeeze. Dilution risk check. One crucial factor for any short squeeze thesis is dilution risk. Dilution happens when a company issues new shares, which increases the total share count and can depress the stock price, essentially counteracting any short squeeze momentum. We've checked for recent dilutive SEC filings like SMINUS-1s, SMINUS-3s, or 424BS, and we found no recent dilutive SEC filings in the last 90 days for CIIT. This is a positive for a potential squeeze scenario, as there's no immediate new supply of shares hitting the market to absorb buying pressure. Recent reverse split watch. Now, let's talk about another important recent development for CIIT. The company executed a 1-for-10 reverse stock split on July 20, 2026. That was just 31 days ago. A reverse split reduces the number of outstanding shares and proportionately increases the share price, often done to meet exchange listing requirements or improve the stock's appeal. Historically, many microcap stocks, particularly those that undergo a reverse split, tend to see renewed volatility or even a price pop within about a month after the split. Show calendar/timeline. While this is an observed pattern in some microcap names, it's absolutely not a guarantee. CIIT being 31 days post-split puts it right in that historical window of potential post-reverse split activity, which could be contributing to the current elevated borrow costs and recent significant price increase over the last 30 days. Again, important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. So, if you're tracking CIIT, what should you be looking for? Keep an eye on the cost to borrow date. Any further increases or a significant decrease in shares available to borrow would be noteworthy. Short data point. Also, watch the volume. CIIT's current volume is quite low relative to its average. A sudden surge in buying volume, especially if accompanied by price appreciation, could signal increasing buying pressure. Given its 49.5 squeeze score, CIIT is in a monitoring zone, not a high conviction play, but that 951.2% CTB is hard to ignore for anyone interested in short squeeze dynamics. Also, continue to monitor any company news and overall market sentiment for the industrials and logistics sector. In summary, CIIT Tansai International Inc. presents a fascinating case with its staggering 951.2% cost to borrow, a relatively small float, and recent reverse stock split history, all contributing to significant volatility. It's a prime example of the unique dynamics you can find in the microcap world. Whether these factors lead to a squeeze or simply signal strong short conviction remains to be seen, but it's definitely a stock to observe for educational purposes. If you found this breakdown of CIIT helpful, smash that like button, subscribe for more in-depth stock analysis, and let us know in the comments what hard to borrow stock should we cover next. Thanks for tuning in, and we'll see you in the next video.